let's take that conversation forward with Mihir Vora. He joins us. And Mihir, वो कहते हैं ना कि नक्षत्र सारे एक साथ आ गए, नवग्रह, everything is come together for us, right? Macro globally is getting sorted, flows are back, political risk is getting nullified, and valuations are not stretched. So नवग्रह आ चुके हैं.
And macros back home also.
Absolutely, it's a Goldilocks.
Yeah.
It's a Goldilocks situation. More in the sense that we had global headwinds, which are now turning neutral. I would say, in the sense, one must realize that there is no harm in being a little cautious because the global headwinds are turning neutral because there is a chance of a slowdown in the US economy. So the way the bond yields have corrected in the US it's what's driving the emerging markets. So to that extent, it's kind of good news in the sense that the world will slow down, but not sharply. That's the Goldilocks situation. But we have to be a little cautious because we are talking about a slowdown where you can see some import on exports, some impact on exports, etc. So for India, I think it's a good situation to be in where you have moderating global interest rates, a not so strong dollar, and not a crashing global economy. Inherent strength of the domestic consumption should carry us through. Plus the Capex cycle, which is just picking up, should see us through the next 2 to 3 years, I would say.
So what would it spell for equity markets? Are the levels that we're currently at pretty much around the peak? Or do you think there's significant headroom to go up until 2024 elections?
I think at the large cap index level, there is still some scope for upside. Though I'm not very comfortable with the speed of the rise recently, but there is scope for upside, I would say, because markets never peak out at average valuations. They always peak out at 1 to 2 standard deviations above
so 5%,
average. So
10%?
we still have 5 to 10% of, I would say, valuation buffer before we reach those stretched kind of numbers. I would be a little more cautious on the micro cap and small cap space because there the velocity is too high. And then I think we should be more discerning on stock picking.
And you did speak about the Capex theme as well. So is that an area where there is value? If you could just be elaborate a little bit more?
Absolutely. So in Capex, of course, there are some fancied sectors like now it's become fancied defense and railway, etc. But there are also the traditional ones like construction, which are not that stretched. So if we do believe that we are in the midst of a good long-term revival in the real estate cycle, for example, which is just beginning to pick up, then I think there's a long way to go for some of these construction stocks because they are not that stretched, I would say.
Mihir, they say markets always climb the wall of worry, but they come down on ray of hope. And there's a lot of ray of hope right now, which means our market's building in a lot of cheery consensus.
No, I think at least till 2 days ago, there were a lot of skeptics.
Okay.
And there was a lot of shorts in the market. If you see the FII net shorts, they were huge. So I think a lot of the movement in the last 2-3 days you are seeing is a lot of short covering, not only by domestic speculators, but I think to a greater extent by FIIs. If you look at the index net shorts, they were almost at record levels till about 10 days ago. So that covering itself is propelling the market. So I wouldn't say we are in a euphoric zone yet.
Why do you say that?
Because this is just the short covering. We haven't seen long build up yet.
Yeah.
Okay, now let's look at the valuation matrix. We are at about 17-18 times depending on the research report you follow. 17-18 times is in line with the averages. If you are looking at market return when markets are in line with the averages, what has history taught us in terms of next 3 to 5 years in terms of future returns?
I'd say about 12% is what one should expect from these levels. If again there is no global shock or anything like that. Yeah, absolutely.
Okay. So you should be having a positive frame of mind even if you are starting today.
Yes.
Let's say somebody is watching those shows, says, okay, I've seen Mihir Bhai on ET now, I'm convinced that there's no bubble in the market, I'm starting investing in large cap stocks.
Absolutely.
You think that a 12 to 15% return is something which is a high probability case, it is not like a out of blue event.
Absolutely, because if you look at the rolling returns history, there have been very few instances where 5-year rolling returns are negative. And almost nil when 10-year returns are not that great. So the longer you kind of take a call, the surer you are of your returns.
Okay. So
in fact, sorry, just to
go ahead.
In fact, I also did a study on long-term returns. If you had invested at all the peaks, so if you had invested at the peak of 2008, or if you had invested at the peak of 2000, and still waited for 10-15 years, the returns are not that great, not like 14-15%, but they're still 8-9%.
Yeah.
Category,
Okay. Oh yeah. 2008, what was the index level? Nifty, the peak.
Absolutely.
No.
It was hardly like, okay, 8,000?
Nifty was about sub 10,000.
Sub 10,000.
8,500 or 9,000 you peaked
Exactly.
out and you
Yeah,
almost
so you're
came.
still sitting on a decent
Exactly.
return.
But that's the nature of the market, you know, Aisha. I mean, look at the peak of TMT versus the return by the time 2008 bull market peaked out. Peak of the next peak, in a sense, I would say happened somewhere in mid-cap stocks in 18. From there to now, that's the nature of the market because the economy is expanding, GDP is expanding, so that is at play.
The base continues
The base,
to bloat
base
up.
is expanding.
But you talked about construction. Where are the other pockets of value right now?
I think the banks and financials are still undervalued, considering that we are in a Goldilocks situation, low NPAs, credit picking up. So far, it's only been retail, but now even corporate credit should pick up. So there's a long runway of credit growth with a clean balance sheet, under leveraged balance sheets for the NBFCs also. I would say financials do offer a lot of value. Some of the insurance companies also offer good value because they've also underperformed for quite some time. And even asset management and capital market plays, for example, you know, we have seen AMCs underperform because of, you know, I would say margin issues or concerns about future margins. But I think that also seems to be stabilizing. So there are pockets of value in financials, I would say. And the other underroad, other underroad sector is pharmaceuticals. I think we're just beginning to see the cusp of a recovery, a structural recovery in the generic bulk drug and API segments. So there, I think exports should now again become the story for the next 3 to 5 years.
IT services continues to be an avoid.
Avoid in the sense it will come back to its old growth rate of 10 minus 1 or 2% kind of a thing. I don't see secular. So if you're bullish on the domestic recovery, domestic capex spending, then this will be more of a defensive, like a mature FMCG stocks.
Any niche areas that you believe that there is some value in the markets?
Well, they were niche till a few months ago. Now everything's
Defense.
Yeah, absolutely.
Yeah.
Defense, railway capex,
Yeah.
those kind of names should continue. And I think manufacturing itself, in general, we just scratched the surface. You know, India is 18% of the world's population, but 5% of the world's manufacturing. China is 11 times bigger than us. So even if 5% of world production has to shift to India, it means a doubling of the base. So these mega trends can, you know, last for a while.
I read this lovely piece from Akash Prakash yesterday that don't rule out China, right? Even one WhatsApp group, you must have read that also. Now the thing is, yeah, I mean, we are in one common WhatsApp group.
You better add WhatsApp.
So my point is, Mir, we are assuming that FIs will come back. That's a big assumption. That's one big fat assumption. That's an assumption.
Yeah.
And there's a difference in assumption and reality. What if they don't come? What if they find China more attractive? What if they say, okay, we missed the bus too bad, but the relative case of coming back to India now at these levels of 21,000 plus is not there? Could that be a dampener for next year's liquidity setup?
To an extent, yes. But if I were to compare India now versus India 10 years ago, there are two huge structural changes that have happened. One is that the oil import bill for the trade deficit or the oil import bill is no longer that much a percentage of GDP as it was, right? Because oil imports have not gone up that much, but the GDP has expanded. So oil sensitivity to the GDP has reduced because services exports have boomed. You know, it used to be $100 billion. Now we are $240 billion. So we are far bigger in terms of services exports, which is reducing the volatility of oil. Yeah. So yes, there is a current account deficit, but it's lesser and much less volatile than what it used to be. So our external vulnerability to oil has reduced significantly. So that's one. And second, again, as we all know, compared to 10 years ago, look at the domestic flows.
Yeah.
The other thing, Amir, I just wanted to talk about, since you're talking about manufacturing. Now, manufacturing is a very large umbrella within a lot of subsectors in there. And I'm going to keep the obvious defense, railways outside of that. EMS is a theme. Do you not worry that it's still very shallow a space to invest in and the discovered names have already run up too much?
Yes, to some extent, I would say that. But again, you know, there will be more companies coming for listing in this space. You typically see, you know, India is such a diverse country and such a diverse economy, and we really have a thriving ecosystem of entrepreneurship. So any sector, for example, which you know comes to the limelight, you suddenly realize that there are hundreds of smaller companies which were already there doing stuff. Yeah. It's just that now they are coming to a certain size and IPO able, so to say. And plus, to some extent, for better or worse, you know, the fact that we have now the SME exchange, where the listing norms and disclosure norms are, you know, not that stringent, is making easier for some of these companies to raise 2 crores, 5 crores, 20 crores, you know, that kind of thing.
Interesting.
So you're prompting my next question in terms of, you spoke of a thriving startup ecosystem as well. What about some of the recent listing? I think there's been like some 40 that we've seen in this year, and there's been Tata Tech, a lot of commendable names. What is your take?
I think it's a function of the market, and it's good in the sense valuations, if they get too stretched, is also not good. We need paper supply to come in to, douse the fire, so to say. I think it's good. I was just talking to somebody, there were 150 IPOs this year, including the SMEs and all. So it's good.
And that's where you can sense the FOMO feeling.
Yeah.
Literally. Looking at the...
I mean, to some extent, people are not really analyzing the companies. They're just looking at the grey market premium and investing. But it's life. It always happens like that.
There's a lot of friends there.
Okay, Mihir, really appreciate your time. Thank you so very
Always a
much for
pleasure.
joining
Thanks
us.
for having me.
And thank you very much.